Right. So what I said here is that the workspaces here represent 8 different time frames with the extended hours on. And you also want to have another set of these with the after hours off, right? Because they're both different. And we're just going through some Wolfe waves and looking through each of these CRVS, and then crowd. So there's nothing here. Going through each one. Okay, so Dash made a move, but even though Dash made a move of 3.82%, how much would that have been if we'd taken that right here? Yeah, for a 5% move, that is acceptable. Okay, I think that's probably the minimum return on investment for a Wolfe Wave that you're looking for. If you keep it around 5%, then that's the very bare minimum that you would want to accept, because anything lower and you take too many of them, then your profit factor is low and then you might end up losing a lot more, right? You want to be in a scenario where you can hit a lot of these or hit just one and make huge amounts of returns on that one trade. Okay, so Dash is one, DDS, DFS, nothing there. So it's great that TradingView allows me to go through these super fast. In Thinkorswim, I won't be able to do this fast. DPZ, oh, Domino's Pizza had amazing earnings. Had you bought the dip right there, missed out on that. EA, nothing there. S&P, nothing there. Okay, you can see that Ethereum's got this bearish Wolfe Wave, but of course, bearish Wolfe Waves are just, we think of them as contrarian trades. FANG had an amazing Wolfe Wave on the daily, and it's done. Facebook doesn't have one. I think it had one on the 39-minute time frame, but and it does have a specific setup associated with it. ET, Fastly, nothing there. Fubo has a bearish Wolfe Wave, so that's something to consider. However, yeah, it's just, you know, if it's really worth it, I don't know. Gold, BLT on gold, GLD. Google's made a massive move here, running into earnings. Goldman Sachs, Intel. Intel's actually up 2.76%, 53 bucks. iRobot, yeah. So you see, you're not gonna catch all the moves in the market. So here's JNUG that moved up like 44%. So this would have been a great move here. You know, I'm not a big gold bug, but Wolfe Waves, these are working fine. Look at that, 37%, 30% move on that JNUG. So these are the ones that we're trying to look for. And like I mentioned before, some of the biggest wins that I made this year were off that daily Wolfe Wave. And I think, who was that? Watt made 700% on that UPS. Those Wolfe Waves on the daily are pretty crazy. Okay, if you find those daily Wolfe Waves and you just take a little risk, they can really be life-changing trades. Huge, massive. Okay, JPM has a bearish Wolfe Wave to the downside, but now it's got an inside day candle, so it's a little bit, it's pausing there. Could reverse. Las Vegas Sands, nothing there, right? So you go through your list and see if you can find any. That's rounding bottom right there. That actually could break out. Is there a 78-minute T2 squeeze? Microsoft, Monster, Micron. See here, Micron actually looks pretty good. Now let's take a look at the risk and reward. So I lost money on Micron on the earnings run, but candle over candle, and it took the Wolfe Wave here, so it's already up 2%. and it's looking like it'd make a move 14%. So to me, I think that's a no-brainer. So let's actually, I'm gonna just take one because I think I need to take one on a daily. So I'm missing out on all these dailies. And we'll do it together. So, and yeah, okay, maybe we should do this 10 seconds into the close, right? So I'll look at, because this thing could easily pull back and form a doji and close at 67.34. It's already reached its move for the day at 2.29. So Valgor, this might be better than Intel. But I think what the semiconductors, SMH, let's take a look at SMH quickly. Yeah, it seems like there's a gap right here at 267, and it gapped up pretty hard on that ETF. And it could be doing these impulse moves, right? So maybe back, try to make another high here at 277. So yeah, I'll take some small risk here on Micron. So, you know, this is going to take how long? Well, if it's a real fast impulsive move, then 1, 2, 3, 4, 5, 6, 7, 8 days. So 16 days, October 29th. And then we're looking for a move up to $76. Wow, $76. Okay, then let's go to November. I'm looking through all the option chains here. So $76. Yeah, this is, look at this. You can get the $75 calls for 38 cents. And then if they move to $76, then you've got a that's 140. That's it turns into a $1.50. Okay. 75 calls are wicked cheap for Nove. Does it have a Wolfe Wave? Oh, November. 75. What if we do the? So okay, like $75 calls are wicked cheap for November. Which November though? Monthly? You're probably talking monthly, right? November 75, 39 cents, right? Yeah. And then Valgor is saying, what if we do the 70 call for November at $1.40? Yeah. So if you do the 70 for $1.40, now they're at $1.44. Yeah, you can do those too. Okay. And if it moves to $76, then those are going to be worth $6. So I think, should we do it? It's a Wolfe Wave. So the question is, do we do the 70 or do we do a staggered 70 and the 75? So then how's the thought process work here? So the thought process works by saying, okay, if you got a $1,000 account, then you got a lot of catching up to do. So then you'd have to go with the $75 calls, getting maybe 2 contracts. So if you have $1,000 position, $1,000 balance, then you pick up 2 contracts of the $75 calls at 38 cents. And that will cost you almost $80 to $100. Okay, so that's 10% of your net liquid, and that's it. Okay, so that's a daily Wolfe Wave on Micron. 14% move is pretty big, and it does have that another earnings, great, but yeah, it's already in cycle 3, so it's time for it to reverse candle over candle with a kicker, and moving up to $76 is not that hard to believe. You can even buy more time on the $75 calls for December monthlies for 93 cents. And if they move to 76, then they're up at maybe $3. OCGN, my gamma squeeze. Is that an A8 in there? There's no A8. There's an A7 earnings run. It's a $10 stock. Would be nice if it had the Wolfe Wave, so it'd be easier for me to allow the algorithms to do its magic. Okay, Micron is something we can put on the watch list, and obviously if we exercise the trend rules, then we can just wait till the end of the day. Which one are you in? Micron already? Which one did you pick up? $70 calls? Okay, fine. I'll get in with you. So the volume there, can you see the volume? What's the volume there? 2,669. You're gonna stagger them? Okay. Now this is a trade that, so what would be the probability of success with this trade? I would say 56%. Okay, and then if you've been listening and learning from all the things that I've taught, you can either put in a position size now and stake it. Stake a position, say maybe half your position size, your intended, or you put in your full. Whatever you want. So looking at Micron, and it's not going to move. Doesn't look like it's moving at all. But I'm going to the November monthly contracts. And yeah, I mean, it doesn't need, I don't think, so the timing part is a little bit tricky because I don't think it's going to take that long, but look at this, it could take you could just chop sideways, right? I can't like this. But yeah, I mean, it's coming out of a cycle 3, so November monthlies are good. And those contracts are trading at $1.42. So I'll pick up a chunk of those right now. So let's pick up 10 contracts. So that's the volume there is at 2,669. I don't know why the number 69 keeps on popping up. So if I buy 10 now, it'll go to 2,679. So I'll buy right now. And done. So it should change to 10 right now. Okay, that's how fast the information gets communicated, okay? Now that's a 1.3% position size. So my account is a little bit bigger. Okay, I'm working with $175,000 account. So I can, this is my position size. Small. Okay. And but when you have a smaller account, right, you know that there's an inverse relationship to your position sizing, right? So let's say you have $1, or no, let's say you have $100 and you want to trade options, and you look to buy, and you want to buy one contract of something, say Apple, and it costs 50 cents. That's 50% of your account. But if you have $1 million account and you buy one contract, that's 0.00001% of your account. So there's that inverse relationship that you have to understand. That's where people get kind of screwed over on blowing up their accounts. Because I think I think in theory, if you have a setup that even gives you remotely 30% success rate, but your profit factor is like 5x, you should still be coming out of that those trades with profit, right? Even if you're losing so many times. It's just, that's how I look at it. So yeah, I picked up, so I should alert now. And yeah, I don't know exactly how these alert services post so many alerts, but it's always questionable. I don't know. So what did I buy? I bought 1.2% at 1.43. Daily Wolfe Wave. There's no A6, but cycle 3 and cycle 3. So what that means is when we look at Micron here, it's gone through an A6, triggered 1, 2, 3 to the downside. And if you've been with me, then you know that on cycle 3 and 4, there's a 60 to 64% chance of a reversal. Okay, so that really works very well with this Wolfe Wave, because we're looking for upside on after it pulled back, and what better odds can you get than 64%? So I should probably buy like maybe 3% on this, but maybe buy at the end of the day, right? There's no rush. Okay, so then that's Micron, and let's keep on going through. And for onboarders, we're opening up positions maybe at the end of the day. We'll take a look. So we're kind of flat. So I was up in my account, my $10,000 account. I was up as high as 13,000, and then all my profits gone. So now I'm at like 9,900 or something. So I'm still there. I'm still like, I didn't blow up my account, right? But you know, all that time wasted, you know, is down the drain. But that's what happens when you get into a chop, and I'm not forcing any trades here, and that's in a different account balance. All right, so Netflix is probably a little bit done, but look, there's a day trade here. So if you want to day trade on a 1 minute time frame, I don't know if there's a power hour rally. There's probably not a power hour rally, but if you feel like you want to do something urgent, then maybe one contract on this thing could work. I don't know, but it's a 1 minute time frame, right? So you're making decisions every 1 minute. So you can see here on even on 1 minute, 1, 2, 3, and then 4, it reverses, right? It's, like I said before, it's almost as if the market was designed by somebody who really, really loves baseball. Neo, new Matrix movie coming out. I don't know. Anybody excited about watching that? I'm not. Nike. So I'm looking for Wolfe Wave strictly. So the mindset has to change again. We don't want to be too, I think if you get too involved in a stock, right? Maybe if you get a Wolfe Wave and then you find out some news about it, then that might help you hold the position just a little longer. But if you have that anti-fragility mindset where you don't give a shit about what the hell the company does, which is probably what you're supposed to do in real life. If you're working in a company and you get a salary from that company, you have an obligation and responsibility to be doing what they want you to do for the amount of money they're giving you. But you don't have to be loyal. Okay, there's no loyalty. You're just there to do a job. So that's what we try to do here. We're thinking about these tickers just like that. We don't give 2 cents about these companies. We just want to see these Wolfe Waves and have good entry and look at good risk and reward. And we know that we are not going to win every single trade, but if we have enough risk designed such that we have excellent reward, like that UPS or Boeing. So Boeing, I made like almost 9,000% in January. And Alibaba, I turned $7,000 into, I had a 7% position, so I turned that into $96,000 on Alibaba. Okay, that's huge. So that's why we put a lot of effort into creating these Wolfe Waves and changing the mindset of traders so that you understand that this game is it's a nasty game. Like, look at all these gaps, they're crazy. But if you can change it and then manage your risk, you should, in theory, make more money, even if you have 7 to 6 losers in a row. Okay, but the mentality of what a person goes through after hitting 6 losses in a row, that is detrimental, right? Okay, so let's go through Nikola. So bearish Wolfe Wave, right? Ouch. Now there's nothing there. Nasdaq, Novavax. Novavax has an ideal trade setup on the 70-minute time frame. Okay, but I'm just looking for Wolfe Waves because just to keep the analysis simplify it. Nvidia's up 3%. Wow. Do we have Nvidia in the? Yeah, Nvidia went long on the systems. Apple's picking up. OIH. Don't know what the hell that is. OKTA. We had these positions and we let them go. I think there was a daily Wolfe Wave on that. Palantir. So Roboblocks, we have that one. It's not a daily Wolfe Wave, unfortunately. And we also have Zoom. Roku is looks like a daily. So this is Roku, our strategy. TGIF, TGIT. There's an A6 in there. Starbucks, nothing there. Shopify, nope. Snow has a bearish Wolfe Wave, right? But I don't know. You should be bearish 20% of the time. I think the best time to be bearish is when you get at least a trend value hitting 2, and then you just kind of wait. In my opinion, or 52-week highs, you start to get a little bit careful. Spot, nothing there. Yeah, they could have worked. It's just they disappear. That's the limitation with the these Wolfe Waves, because once time passes, those Wolfe Waves disappear and then you forget about it, right? So you got to publish those trades, publish them and post them in the Wolfe Wave strategy channel, so that we have some sort of library. And eventually, once the community grows big enough and everyone has the same type of mindset, I'm pretty sure the room will start to converge into thinking as like as one cyborg. Tilray, no. And this permutation of time frames, this is one set. There's obviously several other time frames. I'm just picking one right here that I'm kind of I like to use. Uber, nothing there, so I can't really find anything. Oh, look at that, UPS. Yeah, I actually wanted to get to UPS today, even if though it's up 4%, because it's gonna, you know, if that Wolfe Wave is right, then it's gonna go to you know what, I might even get it at 202. So that would be another 6% into earnings. And I said, yeah, the earnings is the tricky part, right? Oh yeah, and this left a gap here. I might just get one contract just to, and that's how many contracts I probably would have after having a move like 4%. So I'll just pick up one. I'm not gonna alert it. I'll just talk about it, right? And you can kind of see, like, when I put in one contract on UPS, like, let's just do a weekly here at 72 cents, right? So it's just one contract. And one contract on 72 cents might be a lot of money. And should I do that? Maybe it ends up like becoming a doji, like a BLT. So let's just skip one day and then go to October 22nd. And because I want to get one contract, I want to get one that's small enough that it's not going to affect me, right? Because I'm already missing out on the trade. So I could get the 202 call, the $200 calls for 25 cents, and just buy one. Okay, picked up one contract on UPS because I missed the trade, but it's a Wolfe Wave, so I'll just type that in here. And then I'll just, take a snapshot of this. So you might think I'm crazy picking this up, but no, I'm not. It's just one contract, right? And if I get one contract and they turn into $10, that's $1,000 on a $38 trade. So I'll be kicking my butt saying I should have loaded up with 10 contracts, right? But it's really hard to put in 10 contracts after it's gone up 4%. So I'm thinking in terms as if I had 10 contracts and I scaled out of the position, so I should have at least one contract left rolled over into something else, kind of like what I did with the AMDs. Okay, so as we continue to move forward with these Wolfe Waves, oh my god, UPST is up 6-7%. Oh shoot, there's no Wolfe Waves in that thing. And I would probably think about UPST. So if once you build a cash reserve and you have enough money and profits, then to the point where you think you can burn some, then yeah, you'd probably want to use some of your profits in other trades like UPST and take a shot on that gamma squeeze type of trade, right? So, but in the meantime, because I'm drawing down. So I'm down about 28,000 through that chop. So I'm not in the most aggressive, but I don't really care. I just want to just kind of get back into the groove of things. Spent almost like 8 hours on these TradeStation systems last night. It was just brutal. Wow. So nothing there. Win. I think there was a daily Wolfe Wave on Win, but can't remember, it disappeared. Zoom, yeah, we got those. Okay, so that's the 78-minute time frame. And that's about it. So you want to keep on going through these frequently because those Wolfe Waves keep on updating every number of time frames, right? So I would say maybe once every hour. And that's not bad, right? Once every hour, you go through your list and then see which one is showing a Wolfe Wave. And you take, and then you gotta now control your risk such that it's not going to be nerve-wracking when you open up a position, because in theory, like I mentioned before, you should be able to lose 6 times straight and still come out with double the amount of money, in theory. Okay, so if you believe in that, then you should figure out the position size such that you're able to do that, assuming you lose six times in a row. And I'm not saying it's going to happen with a high degree of certainty. I say it's going to it could happen, and you need to prepare for the worst case scenario. But if you kind of just watch out for the risk and reward, so you'll get a whole bunch of Wolfe Waves, not as many as the number of tickers that are listed in the market. But if you go through a lot of these Wolfe Waves, like here, for example, what is this ticker? Zoom. So Zoom has this bearish Wolfe Wave, okay, and it's gone up and it pulled back. And it worked, right? On a $3 move. Now, that's a quick day trade, because this is on a 10-minute time frame, and you don't want to hold a 10-minute time frame trade for more than 4 or 5 cycles, so 50 minutes. But yeah, it's a 1.7% move, and if you want to trade that because you like that that it's extended and you think it's going to revert to a specific mean, then that's a day trade, so you take it. But 1.71% move on a weekly, I don't know what your position size would be, maybe 1 contract. So you could do that. So the position sizing on 1 contract should be low enough so that you don't have to feel like it's nerve-wracking. Just got to know how to master your position size. Okay, so yeah, so I got Micron, picked up Micron together with everybody. So they're up a little bit. And I got Apple. So Apple's got the A6. Does anybody have Apple with me? So Apple's got the A6 scanning. And you can see the A6 right there with a kicker. So I got into this one not because of the Wolfe Wave. I got into this because the algorithm is long at Apple. So, and it's the A6. And I have November 160 calls that I need to kind of recover. So I want to recover on this trade. So that's A6 on Apple, and I think the target is the 50-day moving average at 147. Okay, so yeah, I think that's pretty much it. 14% move on Micron is kind of what I'm expecting, and then we got Roboblocks. I got some garbage Roku contracts as well. Where's Roboblocks? Yeah, so it's taking its sweet time. Maybe, I don't know which one to get. I got the ones for next week. And so then with the onboarders, we will be looking to open up that Roku again. Roku to the Broku. I guess after you graduate from the onboarding, then you should have at least doubled your account right? We're in campaign 3, and we're trying to double the count. It's almost like baseball: strike 1, strike 2, strike 3. So on the first 2 bats, we pretty much got a pretty good win rate and made some good profit. But then on the 3rd campaign, it's getting a little bit tough, right? So we'll wait and see it to the end of the day, and I might add more to Micron at the end of the day, because that's not a bad risk and reward trade. Obviously, we would like to catch these UPSTs and stuff like that, but I don't even know what does anybody know what UPST is? Let me take a look. I know it's going up every day, and I just don't know what the hell the company is. So I was like, UPST. Oh, the 2 biggest stocks that moved today have the 3 letters UPS. Upstart Holdings. What is this thing? Upstart is actually a solid company with revenue. Okay, but my question is, what does the company do? Oh, there it is. It's a AI lending platform. Ah, okay. Shit. Well, anything to do with credit cards and money makes sense to me. Shoot. Why did I think this one's crazy? The the average 3-year loan offer across. Upstart. I thought this was like a Upwork working with like contractors, for example. Oh my God. No, thank you. All right. Well, that's yeah, of course it's going to go up if it's dealing with money and helping people finance their debt. Of course, it makes sense. Shoot. Okay, so now I know. But yeah, let's take a look at UPST here on the chart. So it's up 7%, and yeah, it definitely looks like it's gamma squeezing. So it doesn't even have like a, so it's just like an IPO basically. Getting a negative divergence. So look at that Wolfe Wave on UPST. Jeez. So this one is actually a good opportunity to buy puts, believe it or not. And how many people would buy puts on this? Not many, right? And right now, would I? No, I would not buy puts on this. But that Wolfe Wave, I'll tell you the reason. Oh, when you topped out at 200, did you make money on that? Oh yeah, you did. So this one is even looking better. So your risk, I don't know if there's a Wolfe Wave on the 200, but this one is flashing a Wolfe Wave, right? But it flashed it back here on at 343 back in September 23rd. And then it didn't work, right? So that's what I was saying, like you should use these Wolfe Waves as a contrarian trade. So it's breaking out. But, and then what's going to happen is this 5 pivot is going to move to this candle. So it's got a little bit ways to go, maybe up to $400. So that's obviously the psychological target. So UPST can move up to $400, and then the Wolfe Wave will form another signal. And at that point, then you got your downside risk to, you know, 100%, 96% is kind of ridiculous, right? But maybe 10% at least down to this Darvish channel at 279 is something that you can open up a position for with a very low risk, like buying those contracts for like 50 cents. This is amazing, getting a trade with a Wolfe Wave, but you got to wait till the trigger happens, right? So because you're just, the psychological target is 400, and you put here for 50 cents and it moves up to 400, then your puts are going to be worth like 10 cents. So just kind of wait for this 5 to shift over to this candle, and then wait for that Wolfe Wave trigger to give you the alert. But when you look at this type of risk reward, obviously, you know, dropping down 90% is, come on, it's almost as if it's garbage. It's a garbage setup. However, even garbage is useful too, right? Another person's garbage is another person's treasure. So it's not like a far-fetched idea that it can't not pull back and fill that gap here at 142. Okay, all gaps get filled, most of them. But a 64% pullback is pretty nasty. And if it did pull back, it would probably pull back with the S&P filling that 4,018 gap, if that gap is truly real. And if it did, it would probably happen after January or something. But yeah, wait for, this is something you would put on a watch list to say, okay, let's wait for this Wolfe Wave to trigger a bearish Wolfe Wave on the daily. And then let's then look to get some puts. Okay, because puts are a bit trickier. They don't work all the time. But when they do work, that 20% of the time, then you're making mad money. Okay, so this UPST would be on the watch list. I missed the trade on this A6, so there's nothing. Oh, that's on the 2D as well. So this is daily. Oh, right. So that's the 2D, and this is the daily. So daily is still squeezing on the A6. So you got to wait till that goes to cycle 3. And it looks like it's running into earnings. Let's see if there's like a potential trade on Tesla on the last hour of the day. Kind of moved up here on that 3-minute TTM squeeze. So you can see the Darvish channels here providing an ideal trade setup. Scenario for a 3-minute trade. It's not the longest holding trade. 3 minutes. It probably requires you to hold it for at least 12 to 21 minutes. Okay, so that's pretty much it. Yeah, wow, this market is on fire today, and yeah, totally missing out on a lot of the trades here. But what can I say? Tesla's trying to break out on that cycle 4 here. Tesla needs one nice big dump, gap down, and then we can buy the dip. Can you check Palantir? Yeah, let's take a look at Palantir. So Palantir A7 scanning 2D looking good for in terms of the Darvis channel risk and reward. So buy at 24, move up to 29. Daily, yeah, it's got a purple D, so, and it's got a rounding bottom, very similar to mRNA. And it might have a gap fill here at 27 bucks. So that's a trade as well. I mean, you just want to, so the question is whether or not, like, it depends on how many positions you have and how much risk you want to put in, right? And that's the difference between using a Wolfe Wave and a non-Wolfe Wave. So if you buy Palantir, not sure exactly what the setup is in Palantir other than this rounding bottom, double bottom here. But the risk and reward, I guess it would be that gap at $31. So if that's what you want, then that's a 26% move. And if you want that 26% move on a 2D TTM squeeze, then you would need at least 2 times 14. 2 times 14 days is 48 days, because it's 2 days for each candle. So you need 48 days max to catch that move from 24 to 31. So the reason why I use 14 is because that's the 28 days times two daily candles. So that's 48. Sorry, is that 48? Yeah, that's. Am I doing the math wrong? Yeah, it's if it was a daily candle, it's 14 days, but this is a 2D candle, so it's 14 times 2 is 28 days, right? Am I doing the math right? Yeah, so sorry, 28 days. And that would be the max. Some would say minimum. Yeah, so you need 28 days, monthlies. Yeah, 14 days is the maximum length of a squeeze, and then this time frame we're using is a 2D, so that's 2 times 14 is 28. So you need to give it 28 days. Okay, let's take a look at. So this market is super extended. I don't know exactly. AFRM. So AFRM on the daily. So it's in cycle 2 right now. I don't think this thing is going to gamma squeeze. Well, it could, but So if you kind of think about it in terms of UPS, so you're here and then now you're here. So the risk that you're going to take is really low. I think the best time to buy a put is when you get a trend over 2. Right now, you gotta let go. Right now, the market is ripping higher because of the A6 and the S&P. So maybe on cycle 3 or 4, after the S&P enters cycle 4, then that might be a good time. Maybe on Wednesday. Yeah, just try not to be so anxious on getting puts while the S&P is trying to get into cycle 1 on A6. It's still scanning. So with that type of, being anxious of getting into puts, right? You might want to just look for Wolfe Waves to help you find puts, right? Not assume that a company is going to drop because it's so high. We don't know that. Trend suggesting bullish tomorrow. Okay, so yeah, I didn't catch any of these big moves that are up like 5-6%. Kind of sucks, but it is what it is. What I want to do is I want to come on as frequently as possible to help everyone align their mindset with these Wolfe Waves, because they are quite amazing. You don't need to catch all the 6% moves. You need to catch just that one daily Wolfe Wave that's giving you a 8% risk and reward. And if you catch it, things can change a lot for everybody. All right. So that's about it. I'll be back 1 hour before the market closes. Thank you very much. Have a great day.